Most people are not wrong about XRP. They are just using the wrong framework to understand it. They keep asking trading questions about something that was never designed to behave like a trade. And when an asset is placed in the wrong category, every conclusion that follows feels confusing. That misunderstanding is the real reason so many people feel stuck and impatient with XRP. Hey, this is Journey Crypto, and around here we talk about wealth. Today, I want to clear up one of the biggest misunderstandings about XRP. Many people think the debate is about price, timing, or adoption, but the real issue is classification. XRP keeps getting evaluated with a framework that does not match what it was built to do. This is not financial advice. This is education and perspective to help you think more clearly about what you are watching in the market. One of the most common mistakes in markets is using the wrong framework to evaluate something. We would never judge a highway the same way we judge a coffee shop, and we would never assess a power grid the same way we assess a startup. Financial infrastructure should not be evaluated the same way as a speculative asset, yet that is exactly what happens with XRP. Most people try to understand XRP as if it were a stock or a growth investment. They assume its value depends on corporate performance, management decisions, or revenue generation. But XRP is not a claim on a company. Owning XRP does not mean you own Ripple, benefit from earnings, or rely on corporate success. Ripple could perform extremely well or extremely poorly, and XRP would still exist. That alone shows XRP belongs in a different category. It is not equity, not ownership, and not a business. It is a functional system asset. Its value is not derived from profits, but from what it enables within a financial system.
Most people try to understand XRP as if it were a stock or a growth investment. They assume its value depends on corporate performance, management decisions, or revenue generation. But XRP is not a claim on a company. Owning XRP does not mean you own Ripple, benefit from earnings, or rely on corporate success. Ripple could perform extremely well or extremely poorly, and XRP would still exist. That alone shows XRP belongs in a different category. It is not equity, not ownership, and not a business. It is a functional system asset. Its value is not derived from profits, but from what it enables within a financial system. Systems do not care about narratives or sentiment. They care about speed, reliability, capacity, and performance at scale. That is how infrastructure is evaluated. When people ask why the price has not moved, they are often asking a consumer-level question about something built to solve system-level problems. Until that distinction is understood, XRP will continue to feel confusing. Once the category is corrected, it becomes easier to understand how value is defined. Retail investors tend to focus on price movement, while institutions focus on capability. Institutions are not asking whether an asset can rise quickly in price. They are asking whether it can move value during periods of high volume, settle efficiently, operate under stress, and reduce uncertainty. Large financial systems do not fail because of volatility. They fail when money stops moving efficiently. Settlement slows, liquidity fragments, and risk increases. What works at small scale often fails at large scale. That is when value gets redefined. Assets that reduce friction become more valuable, while assets that introduce delays become liabilities.
This is why infrastructure does not reprice the same way consumer assets do. It does not move on excitement or speculation. It moves on necessity. Necessity does not announce itself publicly. It appears through testing, integration, legal clarity, and system design, often happening quietly in the background. Because of that, price is often the last thing to change. Before price moves, access is created, rails are tested, and integrations take place behind the scenes. These changes do not trend on social media, but they matter far more than headlines. Once a system begins to depend on an asset, the question shifts from whether it is interesting to whether it is essential. That shift is when behavior changes. Speculation gives way to positioning, and repricing becomes structural rather than emotional. Many people feel frustrated because they are trying to measure system-level change using short-term tools. It feels slow and disconnected, but nothing is broken. The perspective is simply too narrow. People often imagine a future moment where regulation is perfect and clarity suddenly arrives, triggering movement. Real systems do not wait for perfection. They move forward with certainty. In calm environments, inefficiency can be tolerated. When stress enters the system, reliability becomes the priority and price becomes secondary. At that point, the key questions are what works consistently, what reduces uncertainty, and what performs without failure. When those questions take over, value is reassessed structurally. That is why certain assets can be repriced quickly, not because belief suddenly changes, but because the system needs them. When people ask whether XRP can be repriced, the answer is not a prediction or a timeline. The answer is that it can happen under the right conditions. XRP does not require an emergency to succeed long-term, but stress accelerates repricing by revealing which assets are optional and which are necessary.
If a system requires speed, finality, liquidity, and legal certainty, and only a small number of tools can provide those features, those tools will not remain priced as conveniences. They will be priced based on necessity. This is not about guarantees, it is about eligibility. XRP is eligible to matter when certainty becomes the priority. The final mistake people make with XRP is how they plan around it. Strategy always reflects what you believe an asset is. If XRP is viewed purely as a trade, the plan becomes timing entries and exits. Trading itself is not wrong, but if the category is wrong, even good execution leads to poor outcomes. When XRP is understood as a system asset, the strategy changes. It becomes about optionality, such as using it as collateral, generating yield, borrowing against it, rotating into cash flow assets, and diversifying without fully exiting. That is a different wealth framework and the way institutions approach long-term positioning. Education matters because understanding shapes behavior. When behavior changes, trajectories change. That is how people move from reacting to positioning and from accidental outcomes to intentional wealth building. If this helped you see XRP more clearly, then you are not here for hype. You are here for understanding. Like the video, subscribe to the channel, and stay connected. As always, stay wise, stay wealthy, and I will see you in the next one.